Are we setting up for a generational Fed rug pull, or is this the beginning of a massive recovery, potentially one of the best V-shaped recoveries we've ever seen, and the markets are going to be touching 700 before we know it? What's up, trading friends? Today, we're seeing the markets and exactly where the markets are heading in the upcoming week. We're going to be talking about some catalysts that are brewing for us in the upcoming week, and then we're going to be talking about what else going on and much more. So, without further ado, hit the thumbs up button, and also listen, if you watch these videos on a daily basis, on a weekly basis, monthly basis, annual basis, subscribe, okay? We only have one goal, to be at 40,000 subscribers by the end of this year. We can't do it unless you help us out, okay? So please do so. Now, let's get to work. So, as always, the first thing we want to analyze, right, in order to predict the future, we first need to understand the past, right? This is what I always tell you guys. I say, you know, if you want to understand where things are going, you first need to understand what has caused stuff to get to where it's at right now, right? And then anticipate whether or not the downturn catalyst is going to keep up or the upturn catalyst is going to keep up. What's really going on? So the markets were in a frenzy, okay? The markets were in a frenzy for a various number of reasons. The first reason was that people believed that we were in an AI bubble, okay? This added a lot of pressure selling into the, into AI stocks, and everyone's saying, oh, AI is overvalued, AI is this, AI that, and then Nvidia came out, and Nvidia was like, hold my beer, all right? Overvalued? Yeah, all right, buddy, come on, right? Now, obviously, I think that this is something that was kind of expected, because if you think about the reason why everyone was saying that AI is overvalued is because they were kind of doing that circle jerk, okay, for lack of a better term, right? The companies are saying, hey, you know what, man? You scratch my back, I'll scratch your back. You scratch my back, I'll scratch your back, okay? Which reminds me of that, maybe I'll play the clip for you guys, okay? But anyway, so when you gotta understand what's really going on here, right? What's really going on here is obviously Nvidia's earnings were going to be good because at the end of the day, right, they're getting prompted up by all these different tech companies, right? Now, the reality is though that we weren't sure whether or not they were going to be meeting the expectations of Wall Street, especially because, in the market conditions which we're in right now, right? Well, again, right now, things have cleared up a little bit. The skies are looking clear a little bit, but it was way more stormy back then, right? It was way more stormy back then. And, if Nvidia's earnings were off even a little bit and they did not meet the expectations, whether it was the EPS, whether it was the revenue growth, whatever it could have been, right? The markets were going to sell off massively. So Nvidia earnings came up, helped the bounce back in confidence when it comes to AI consumer stocks. And then, we go ahead and we talk about inflation, right? Inflation, right? Oh, inflation data, this, inflation data. Are we going to get a rate cut? Are we not going to get a rate cut? What's going on here? What's going on there? Well, what we got is we got the Fed, okay? We broke the Fed, guys. We broke the Fed, all right? The markets were down so bad, right, that the Fed realized, and they were like, okay, you know what, man? We can't allow this to get any worse, because if things get any worse, then we're going to be facing a recession, right? Now, let's talk about how does that even really make sense, right? If you've been watching this video, you probably know how that makes sense, but let me just summarize it real quick. So the reason why the Fed wants to potentially not cut rates is so they can kind of avoid a recession, okay? And raise the probabilities of a soft landing, okay? Or maybe even better than a soft landing, okay? Goldilocks zone, they call it, right? Now, this is the thing, is that you got to understand that the thing that they're trying to avoid is a recession, right? However, this is the funny part, is that you could have a stock market crash induced recession. When the stock market crashes, you could get a recession because the markets crashed. I mean, this is what we got in when we go all the way back, right, to when I was born, right, the 2000s, right? When we go back to the 2000s, or not 2000s, 90s, close to 2000s, right, when we got this massive AI bubble, right? The AI bubble burst open, right? So, or was that, no, that's 2008, right? We got the AI bubble burst, right? So that's what we got over here, where the whole market went into a recession because of the stock market crash, right? So many people think that the stock market is a direct visual representation of the economy. That's not how things work. I mean, let me give you guys an example, right? So let's say the opposite end of that, right? Let's say 2020, for example. Do you think that the US economy took 1 month from February, March, April, May, let's say 2 months? Did the US economy take 2 months to recover from COVID? From the COVID lockdowns? That's how long it took to recover from? Because look, the stock market was the stock market was again making all-time highs, right? So you got to kind of understand that these two things they go together, right? They complement each other, but they're not, the stock market is not the visual representation of the economy. Okay? So there's that. So the last thing that the Fed wanted was, as the markets were slipping, to cause the markets to slip even more, right? By coming out and saying, hey, everyone, we're not cutting rates. Now, the Fed could actually reasonably convince themselves that they can go ahead and cut rates. Why? Because we didn't have data, right? We had the government shutdown. Okay? Now, when we are going to get these Fed, whether or not we're going to get these, rate cuts or not, is going to be really interesting, because guess what? Now the markets have recovered a shit ton. I mean, look at this green boner, right? The markets have recovered a shit ton. So what we're looking at now is we're looking at the Fed no longer being fearful of not cutting rates because the markets could crash. Because the markets have recovered so much at this point where they're literally closing in on their all-time highs. And if the Fed comes out, the Fed could now afford a market pullback caused by them announcing that they're not cutting rates. And they could use them not cutting rates to help avoid a recession elsewhere. Does this kind of make sense what I'm saying, right? They could kind of fight off inflation to avoid a recession. So what I'm trying to explain to you guys is that the reason why the Fed turned dovish, aka coming out and saying, hey everyone, we're going to go ahead and we're going to cut rates, was because the markets were on the brink of a massive crash. The consequences are not the same for the Fed announcing that they're not going to cut rates, because the markets are no longer at the brink of a crash. Okay? Now, I think that we may still, again, right? I think that the problem is, and I'll tell you guys this, is that I don't like it when the markets are too overconfident, and the markets are way too overconfident right now that we're going to get this damn rate cut. They are just there is just too much confidence going on. I mean, there's still about only a 75%, 80% chance that we are going to get this rate cut this December. Now, Jerome Powell is giving a speech at some fucking school or some shit like that on Monday, I believe, right? So, but I don't think that they're going to ask him anything, economical related, okay? I doubt that. I think that he's going to do a good job kind of maneuvering things, but I wouldn't be surprised if somehow something still slips out and people are like, oh, look, did you hear what he said? And the market sell off. I wouldn't be surprised, okay? So for me, I think that right now, again, this is what I'm doing, right? I told you guys this before. I'm putting 30% of my portfolio. I'm averaging in. I'm not putting it all at once. Always at all once. No. I'm averaging in 30% of my portfolio into UVXY, okay? A lot of times what people want to do is they buy leap options on the VIX. That's what they do. I like to buy shares. I like to average in. I found that averaging in is easier for me because when I try to buy leaps, it really is still dependent on the date that you're kind of buying the leap at, right? And it's a little bit harder to go ahead and kind of, adjust. Now, look, I could be wrong, right? Some people might say, oh, well, averaging in, there's the decay. Yeah, but if I'm averaging in, it kind of makes up for the decay because I'm getting an average of the decayed period. I'm not just going ahead and if anything, buying the leap is worse because it's locked in price, right? I mean, does that kind of make sense? Anyways, but that's what I'm doing, right? I'm averaging into the UVXY as a hedge against the broader markets coming down crashing, okay? So for me, when I look at the SPY, right, the SPY is obviously gonna have 700 as an important resistance level. Like it's gonna be very rare for us to just break clean off of 700. And we do have the Fed meeting, not this week, I believe next week. So when we do have the Fed meeting, I think that even if we do get a rate cut, we're going to get an underwhelming rate cut. What do you mean an underwhelming? We're going to get a rate cut backed by Jerome Powell saying a bunch of bullshit that the markets are not going to like. Because you got to understand, right? The markets are forward-looking place. They're always trying to price in future events. That's how the markets work, okay? So once we get the rate cut, Jerome Powell's going to say some shit like, oh, well, we're going to hope that this doesn't lead to a recession. But if data comes out, then we're going to need to stop this mess. People are going to be like, uh-oh. And before you know it, we're back to 670 again. Okay? So That's going to be interesting. That's going to be interesting to see. Now, that's my take, okay? Is that right now I don't like the overconfidence in the markets. I don't think that right now the markets are just going to rip up and they're going to go to fucking insanity. I think that what we're dealing with over here is an overconfidence in the retail sector that we are 100% going to get this rate cut. He said the Fed said so. The Fed. All right. Well, I hope so. Again, remember I hold stocks. Okay. So I hope so. But I'm just saying, you got to be careful. So trade carefully. Okay. Nothing's confirmed yet, and I wouldn't be surprised if we do see more sideways movement in the SPY before we finally rip to the upside. But hopefully, man, this dip gets bought up real quickly, and we break 700 and freaking 750 shows up out of nowhere, right? I mean, how amazing would that be, right? Santa rally coming in, and dude, that would be something. Wouldn't that be something? That would be something, right? Listen, let me tell you something. Our good news for you guys. Right now, our private community is on a massive, massive sale. This is the cheapest it's ever been. The next 10 members that join, they get access to it for a 50% discount. Relax. Don't click away. Listen to me. Wait. Let me tell you something. Okay? Let me tell you what makes our community different from every other community out there. Okay? This is what makes a difference. Is that, first of all, we give you access to everything you look for. Okay? We give you access to day trade alerts, swing alerts, option alerts, lessons, one-on-one access, dividend stocks, crypto alerts, everything. Now, let me show you what it looks like actually. So this is what our alerts look like, right? We give it a ticker, we give it an entry, we give it an exit, we give it a stop loss, and we tell you how many shares to buy in your portfolio. Nobody else does this. We tell you how many shares to buy in your portfolio. Do you understand what that means? In your portfolio. Okay? So how do we do so? Well, we say the share size in a 10K account. So we say 10 shares in a 10K account. That means, let's say you have a 50K account, you buy 5 shares. You have a 5K account, you buy half these shares. Simple and easy. And we've been crushing it, man. I mean, just look at the price of SOUX today. This was literally a couple of days ago, right? Friday last week. This is when was this? This is CMCT. This is Monday last week. Take a look at CMCT, right? We bought it at 280 to 260. Right now, I think it's in the 4s actually. And our community, what actually makes a difference is that our community is the only community that comes with a 2 weeks free trial and a 30 days money back guarantee. You heard that right. 14 days free, 30 days money back guarantee. No one else is offering that. 14 days free, 30 days money back guarantee. Do you understand what I mean? A lot of these Discords, what they do is that they say free trial. Their free trial is like, oh God, please let them forget that they signed up and their card gets charged and we get paid. That's how they work. That's how they work. That's not how we operate, okay? That's why we have over 400 members come back month after month. Jimby says 5 days into the 14 days free trial and the Discord cost is already paid for. I've only been trading the swing alerts. Also, it would be a lot more if I had the time to also day trade. Thanks, Sam, and for the amazing team you put together. Beautiful. Granny says, been in a few servers in my life. The rest don't even fucking compare. Not just the quality trade, but the mentors actually caring about you making money. Stop slacking for the free trial. Least I could say after all, the bread this place made me. Appreciate you, brother. And he sent an audio. Let's take a look at it.
All right, had to. And shout out Pro Trader JS and everybody else too. I make money off of, but the screenshots are from Capital Gains and Pro Trader JS. Look at the screenshots below. Deadass just paid for my ski trip. I'm out here on the slopes. I haven't done shit all day today, except for fucking ski. Hit a few buttons on my phone, and fucking made a few $100. All right.
Beautiful. And then this is Wednesday. My man brought in 2,500 since trading with us. Now says I made 53% profit on options trade and even more exciting position as well. On one trade, was able to make up for the fee paid for taking the class. It was all worth it. Thanks so much, Sam. Beautiful. Thank you, G. Happy Thanksgiving, everyone. Made my first profit in the options trading. Beautiful. Now he says the P&L doesn't work yet, but he's got it over here. Wonderful, man. Wonderful. I joined after getting burned in Moon Market Discord from a pump and down about 5 months ago. Easily the best decision I ever made. Keep working hard, Sam. I appreciate you. Listen, give it a shot, okay? That's all I'm going to tell you guys. I could go through all these. Lily Didn't Kill Yourself says that hilarious. Same says, this community changed my life. The few thousand I made here this month did not, but getting out of my losing streak and what felt like a damn gambling habit did. Like Sam says, trade the best, leave the rest. And that's exactly what this community has been. Only quality. Beautiful, man. Beautiful. Give it a shot. It's never going to get cheaper than this. 2 weeks free trial, 30 days money back guarantee. Next 10 members, 50% discount. I look forward to meeting you guys in Top Trade Academy. Thank you for watching. Your boy, Sam.